This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/28/21, show number 303. It's Fed Day, Nick. So what does that mean for the markets and for you and me?
Well, it could mean a lot or it could mean nothing. Today, the Fed concludes a 2-day meeting, and around 2 o'clock p.m., we're going to hear their interest rate policy decision for the U.S. By Fed Chairman Jay Powell. Now, truth be told, the Fed is not expected to do anything. We're not expecting a tapering. We're not expecting interest rate hike or anything like that. So the bottom line is that we're going to just see what the verbiage out of the Fed what they have to say, really. So we're going to just find out if tapering is in the cards down the road or if it isn't.
Hey, you know, I was at a crap table one time, and the guy said, what does a Tailor do? I said, I don't know. He says he presses, and he was talking pressing his bet up. Well, here, what does a Tailor do? A Tailor tapers, right?
That's right. And if there's any talk of a taper, this market could go into a tailspin. As we know, the Fed is currently buying $120 billion a month of mortgage-backed securities and U.S. Treasuries. If they mention any type of taper, you can bet the bottom dollar that the market will have a tantrum.
Hey, well, any type of taper is a bad taper for this market, right? Oh.
Any taper is a bad is very bad for this market, because that really is the catalyst for the rally that we've seen this year. So again, the Fed is printing $120 billion a month. They're buying mortgage-backed securities, U.S. Treasuries. If any kind of taper occurs, this market will go into a big tailspin.
All right. So they're going to tread very lightly then, in all likelihood, Nick?
I think they will. I don't think they're going to say anything this time around. They may start to say something like they'll forecast any kind of taper down the road, but they're not ready to do it yet. That's what I'm expecting. But if we hear anything that is a bit hawkish out of them, these markets could come under some selling pressure.
Really? Well, it wouldn't surprise, would it?
Well, I mean, honestly, you know, we've seen this year, we've seen sectors go into bear markets and other sectors go into bull markets. Money has just been rotating constantly, and that money is generated from the central bankers. And it's not just the bankers here, meaning the Federal Reserve. It's also the European Central Bank, Bank of Japan, and other central banks around the world. They're all in on it together. They're all printing tons and tons of money, flushing the system with liquidity. Any kind of liquidity removal, that's it. The game is over. So again, you know, we do have a lot of asset bubbles out here, as you know. I think we're looking at the biggest bubble of all time, but it can continue to go and go bigger and bigger. So we'll just hear what they have to say today. But I think everybody is listening to Jay Powell.
Yeah, everybody. He's like the old E.F. Hutton, isn't he?
He is. When E.F. Hutton speaks, everybody listens. That's great.
Yeah. Hey, well, you know, you just have to look at it and shake your head, because there's nothing else you can do here, and they're going to do what they're going to do. But earnings. So earlier in the morning, earnings, Apple had stupendous earnings. I mean, I was surprised. I think the entire street was surprised how good their earnings were. They were up substantially in North America, but in China, they were up, way up, and in every product line as well. And so pretty shocking there. The price, it got slammed earlier, and now it's recovered. What are we seeing earnings-wise from the big tech companies?
Well, the earnings numbers are all blowout numbers, and they were expected to be absolutely, you know, amazing, and they were. They really exceeded expectations. Google's numbers were off the charts as well. But a lot of times what happens in the market is that stocks will very, very often run up into the earnings announcement. And when that happens, you know, the earnings are already factored in. So a lot of times the market already has that factored in, and these stocks have to go and sit on the sidelines for a little bit. They have to pause or take a break, and then maybe they could inch up higher down the road. Apple's a perfect example of this. Apple in the beginning of June was trading at around $124. And then earlier this month, it went up to $149 or basically $150. So now the stock is trading at around 144.50, 144. Yeah, right around 144.50 currently this morning. Did trade a little bit lower earlier around 142.50. But that's just digesting the gains, just digesting the run that it had. So I always tell everybody, never buy a parabolic chart. If you were buying Apple ahead of earnings, you were buying a parabolic chart. So now it's pulling back a little bit. Now, on the flip side, Google is up basically, 3.5% today. It's up 97 points as we speak. And you have a good reaction in Microsoft, but that's only up 45 cents. And their numbers were pretty amazing as well.
Hey, what about Tesla? Now, there's a whole bunch of things with their earnings, and I'm not going to get into accounting practices, any of that. But for them, as much as their earnings that are real, they were pretty well above what all the gurus were expecting, weren't they?
Yeah, Tesla's earnings were a bit better than expected. Now, I didn't really dissect them or go into it too deeply or even listen to the conference call. I really care about the reaction in the market, but I do believe that those numbers from Tesla were better than the market expected, and they did make some more money and sold more cars than anybody expected. So, Tesla's been acting decent, but the chart pattern is still a very sketchy chart pattern. This stock, you got to remember, back in early January, traded above $900. And here we are today sitting at around $643. So I think you got to still be a little bit careful with Tesla here. I do not love the chart pattern on the larger time frame. I think that's still vulnerable to more declines, but the numbers were better this time around.
Wow. So yeah, like you can't get too obsessed with this stuff because it's going to drive you a little crazy and you're expecting earnings to go high and then the stock, it's a big yawn or it goes down. And so you don't buy on earnings is what it comes down to, right?
That's right. It's just a gamble. If you're going to be in a stock ahead of the earnings announcement or buy, right on the earnings announcement, it's really just a gamble. So you got to be careful. What I like to do with these kind of names is I like to let them settle out for about 2 to 3 days, sometimes 5 days. And then I reevaluate the chart and I get an opportunity there, especially if there's a big sell-off. So that's what I look for during earnings season now is I'll go hunting. After these companies report, I'll look for the big reactions. And then I just go and I find the institutional buy levels. And that's where I'll be getting into a lot of these different names.
Yeah. Yeah. Well, we know that manipulation happens on the eve of earnings. It's almost like options X when you get down to it, Nick.
It is very much like options expiration. But what the funny thing is these companies report and each and every day. And, you always have to be aware of who's reporting if you're going to sit in these stocks while they report. So I personally don't like to be in stocks while the earnings are announced. But afterwards, I have no problem jumping on board and getting involved in them, especially if they can sell off after the numbers are released and they give you a nice discount price to get in them.
Yeah. Hey, so none of our discussions would be complete without a discussion of Bitcoin and gold and silver. So Bitcoin's almost at 40,000. It looks like 40K is resistance now. And if it doesn't break 40, that could be a bad sign, couldn't it?
Yeah, so I think it was yesterday or the day before. I think it was Monday we talked about it. I said it could go to 41,400. That's going to be your daily chart resistance level. It looks like we got as high as 40,950. Now you're back below the 40,000 level. The catalyst for the move higher in Bitcoin was that Amazon was going to start to take the cryptocurrency. That happens to be false. That's not that's not true. And, so you have to just chuckle at this stuff. I like to call Elon Musk the Bitcoin Moses, but he parts the way for this stock. And, again, you had that big powwow between Musk and Dorsey and a bunch of others. So we'll see how it plays out. But I think it's going to have some real trouble getting above that 41,400 level. And, we'd have to look at it. But the stock overall, good reaction this week. I'd be more inclined if I owned it to take profits here because I think it's still going down to 22,000, 21,000.
Hey, you could have made a third of your money in a week. All right. 1/3. There's not a lot of things you could do that in. And this is why you need to be a swing trader in cryptos. you can't do these things long term, because long term, we know what the charts look like. We know the parabolic moves. We can almost predict them. And, now these long-term hodlers, no, I won't sell my Bitcoin. I'll sell my first kid before I sell my Bitcoin, and just watch, wait, and see what happens here. So, look, gold and silver, they're just in a kind of downward consolidation channel here. They can't really break out. They're just kind of stuck for the time being, aren't they?
Yeah, that's how it seems right now. Even when you look at gold futures right now, sitting at just above the 1800 level at 1804 and a half, it's hanging in there. Gold miners, though, really the chart is just still struggling to get any kind of a real bid. So I've been a little bit cautious with gold and gold miners at the moment. I love them longer term. Something's just not right here. Today, you're going to have the Fed announcement at 2 p.m. So, if the Fed continues to say easy for longer, that's usually a good headwind for gold to go higher. However, chart-wise, there's nothing all that special. The daily chart of gold futures is not a terrible-looking chart, so there still has a fighter's chance here. But I don't like it when the gold miners are not leading the gold. It's the gold metal itself, and that is the case at this point in time. When you look at the GDX, which is the gold miners ETF, it's really a laggard to the gold price, and I think you got to be careful with that right now.
Yeah, and that's pretty much tried and true wisdom for the metal sector. When you get real rallies, you'll see a week or two ahead of time, man, all of a sudden the miners start rallying, and then the price of metal catches up with it. It doesn't work the other way around, unfortunately. So, hey, that's it for today. Go over to inthemoneystocks.com. Find out how Nick has been beating the markets consistently for more than 2 decades. Check out the Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. And don't forget, we want your email. Send it to kl@kerrylutz.com. And Nick, we will talk to you on Friday.
Thank you, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.